All right, let's get right into it. If you're in finance, you know that figuring out an investor's real strategy, well, that's the whole game. But what if the data we're all looking at is just kind of flat? Today, we're going to look at a totally new way to see an investor's true playbook, something that goes way beyond just a simple list of names.
So picture this, and I bet you've been here before. You're looking at a company and you pull up a list of all the funds that have invested. And yeah, that's useful information for sure, but it's also just a list. It tells you who put money in, but it hides the really important stuff, the how and crucially, the when.
And that flat list immediately makes your brain start asking a million questions, right? You're looking at those names and you're thinking, okay, who was the first one in? Who is the real believer here? Or who are the usual suspects that like to invest together? And of course, who is the fund that always waits for someone else to lead before they jump in later on? Answering those questions, well, that's the problem. It means you have to go digging. You're sifting through old press releases, news articles, doing a ton of manual work just to build the story yourself. And honestly, it is so easy to miss the crucial patterns, the little clues that really give away an investor's true strategy. But what if there was a better way? This is where a new approach called portfolio overlap comes into play. It's designed to do all that heavy lifting for you, to automatically add that missing context and turn a boring, flat list into a dynamic map of an investor's world. So what is it exactly? Well, portfolio overlap is a feature that looks at all the shared investments between different funds, and then, and this is the key part, it categorizes them. It's built to show you what investors actually do, not just what they say they do in their marketing materials. And really, it all comes down to answering this one powerful question. Which funds share a similar investment playbook in practice based on how and when they actually deploy capital? It's all about finding the other players who are running the exact same plays on the field. So how does it all work? The logic behind it is actually beautiful in its simplicity. Instead of just giving you a list of who invested in the same companies, it organizes everyone chronologically. It all boils down to three simple, powerful buckets: before, same, and after. Let's break that down real quick. First, you've got invested before. Pretty straightforward, these are the folks who got into a deal early. Then there's same stage. These are your classic co-investors, the ones who partner up in the same funding round. And finally, you have invested after. These are the funds that follow, the ones who might come in later after seeing your chosen fund make a move. Okay. Theory is one thing, but let's see what this actually looks like in the wild. We're going to take a look at the investment firm Creator as a case study and see how this whole framework just instantly lights up their entire investment playbook. And here it is. This is the portfolio overlap view for Creator. You can see it right there, clear as day, those three columns we just talked about: invested before, same stage, and invested after. That boring list of names is now a strategic, organized map. It's a total game changer. Okay, let's zoom in on that first column, invested before. We can see a perfect example. Multiples PE. They invested in a company called Opafin way back in December of 18. Creator didn't get into that deal until March of 2024. Just like that, you know who the early player was in that specific investment. Now slide over to the middle column, same stage. For that exact same company, ApicFin, we see Norwest. This tells us they invested right alongside Creator, making them a direct syndicate partner on this deal. This is how you spot who likes to work together. And check this out, because this is where it gets really insightful. Over in the invested after column, who do we see? Multiples PE again. But hold on, this time it's for a different company, Kagata Financial, and they invested after Creator was already in. This shows you that a fund's role isn't static. It can be totally different from deal to deal. And this slide really nails that point. The relationship between any two funds is completely dynamic. You can see right here with Norwest, they were a co-investor with Creator in one deal, but in another deal, for a company called Ikaya Finance, Norwest was actually the early investor that Creator followed. Now that is the kind of nuance you completely lose with a simple co-investor list. So let's pull back for a second. What does all of this actually mean for you? Well, by adding this simple layer of time, of chronology, you're not just looking at data points anymore. You are quite literally uncovering an investor's real-world playbook, and that gives you a massive strategic edge. And this is why it matters so much. You get to see their actual playbook, not just some polished strategy on their website.
You can finally understand their real capital deployment patterns, analyze investment trends, and most importantly, you get a super deep insight into their entire ecosystem, who they follow, who they lead, and who they like to partner with. So in the end, this new lens completely transforms flat, static data into a living, breathing story of strategy, timing, and relationships. It really leaves you with one final powerful question. Now that you can see the game being played so clearly, whose playbook are you going to uncover first?